It's possible that you've noticed ARK Invest's latest stock forecast. According to Kathy Wood's ARK Investment Management, if you follow Tesla and the financial markets, you should expect Tesla Incorporated shares to more than double to $4,600 by 2020. On April 14th, ARK introduced their upgraded model, which costs over 4 times what it does now. ARK projected last year that by 2025, Tesla's stock will reach $3,000. However, because of its updated assumptions regarding the company's prospective Robotaxi business and capital efficiency, it has since altered its forecast. What are these presumptions and how did ARK determine these new figures specifically? To find out, keep watching. Although a large number of individuals globally, including government officials, are against Tesla's complete self-driving capacity, ARK is becoming more and more optimistic about it. Thus, the investment firm's most recent estimate of Tesla's future value includes the company's prospective Robotaxi business. By 2026, Tesla shares might be valued at $600, according to ARK. The company projected a share price of $3,000 by 2025 in a prior report. The bear scenario estimates a price of $2,900 by 2026, which is still more than 3 times the share price of $1,005 that is currently in the bull case, which is around $5,800. Even in the worst case scenario, ARK predicts that the value of Tesla would almost quadruple by 2026. ARK made the following statement in response. We believe our Tesla model is methodologically conservative, even though it is calibrated to our predictions for 2026. In 2026, we predict that Tesla stock would behave more like that of a small company than a fast-growing one. A number of important factors are taken into account by analysts when setting price targets. Many experts ignore Tesla's potential robotaxi business and its complete self-driving capability, although some do. This is most likely due to the technology's lack of functionality, even though CEO Elon Musk has stated repeatedly that it will be available by year's end. Notwithstanding Musk's unduly optimistic social media posts, many questions remain about the development of FSD Bay and whether or not Tesla will launch a Robotaxi. ARK's optimistic analysis of Tesla depends heavily on the company's ability to build and implement a network of autonomous taxis. Based on ARK's analysis, the taxi network would offer a service similar to Uber for getting people to and from different places. Even though they will have less margins than Robotaxi revenue, electric vehicles are predicted to generate 57% of the company's revenue in 2026, according to ARK simulations. The business line below breaks down the attributable revenue, earnings before interest, taxes, depreciation, amortization, and value for this model. ARK Invest estimates that in 2026, the company's Robotaxi business will provide over half of the expected earnings before interest, taxes, depreciation, and amortization, and approximately 60% of the company's estimated value. Elon Musk, the CEO of Tesla, announced that a service of the kind is being developed at the Cyber Rodeo Festival in honor of Gigatex's inauguration. It's important to keep in mind that previous versions of ARK's prediction models caused investor skepticism before we discuss ARK's current price goal. Wood has long supported Elon Musk, the CEO of Tesla. Tesla continues to be the largest position in the flagship ARK Innovation ETF, making up 10F assets, despite the fund's reduction in its stake last month. Before the massive stock price increase and the pre-split run-up, ARK CEO Kathy Wood had projected a price target of $4,000 in early 2018. That is $800 after a 5-to-1 split. The mid-April 2022 price of Tesla stock is currently approximately $5,000 before the split, or $1,000 after the split. Tesla shares hit an all-time intraday high to $1,243.49 at the beginning of November. Since the start of the year, the stock has been under pressure due to macroeconomic worries, shortages of components, and inflation and input costs brought on by the conflict between Russia and Ukraine. The stock bottomed out in late February, but it recovered through March and the first part of April. With Musk's announcement of his offer for Twitter on Friday, Tesla's stock dropped by almost 3. Stocks closed at $985. By 2026, a $1,000 investment in Tesla shares at the closing price on Friday would have produced 1.2 Tesla shares. The stock will be worth $4,692 if it is held for the next 4 years and rises to ARK Invest's desired price. This corresponds to a return on investment of 369.2%. It's crucial to remember that ARC's research relied on a statistical model to provide a range of possibilities. These scenarios use assumptions about important business variables like the quantity of cars sold, their average selling price, and so forth as input. And the output is a probability distribution based on those assumptions for different scenarios. The most crucial thing to keep in mind is that Tesla's car business and Robotaxi potential are the foundation of this plan almost entirely. A few things, though, are absent from the model. Firstly, Tesla's artificial intelligence, a weed service robot, which resembles a human, and the company's renewable energy division. According to ARC, it makes sense to leave out those business components in 2026 because they are all somewhat unknown and would lead the model to fluctuate excessively. For instance, Tesla has made its automotive division a priority recently, and this may continue in the future. The limitations on the battery's scalability and availability are the main causes of this. Moreover, the solar sector depends on outside installers, which makes scalability even more challenging. Elon Musk claims that Tesla's tech, including its AI training systems, is available for licensing as a service. However, no agreements have been officially revealed as of yet. It's also challenging to predict the humanoid robot's timeline. Tesla has had difficulty in the past developing its AI for complete self-driving systems based on vision. They usually seem to hit a ceiling after a while when iterating various models. The humanoid robot will be powered by Tesla's vision-based artificial intelligence, which the company is now developing for its vehicle. So there won't be any robots without AI vision. According to ARK Invest, there's still a lot of room for Tesla stock to rise. In 2026, that network might bring in $486 billion for Tesla based on ARK's bull case scenario. In the worst case scenario, ARK projects that Tesla's Robotaxi network will bring in $51 annually. Furthermore, Tesla's revenue in 2021 came primarily from the sale of electric cars, bringing in roughly $54 billion. When will Tesla be able to commercialize fully autonomous cars, much alone a network of self-driving taxis that can move between towns, cities, and nations, is the big question facing investors. In ARK's worst case scenario, by 2026, a network of autonomous taxis will be up and running. Not only have the commercial releases of Waymo and Cruise bolstered our present outlook, but fundamental improvements in AI have also, said ARK Investment Management. Our estimates indicate that Tesla will start offering autonomous ride hailing for sale in 2024. So it's hardly surprising that ARK has an optimistic outlook for Tesla shares, as the electric car company is the investment manager's largest stake throughout each of its ETFs. Kindifying data indicates that ARK owns $1.43 billion worth of Tesla shares, which is the only stock in ARK's flagship ETF that has performed well in the past year. What are the opinions of other analysts? Analyst Adam Jonas of Morgan Stanley claims that Tesla is more than just a vehicle manufacturer. It is an onshore infrastructure provider for renewable energy. From this perspective, the analyst says that Tesla stock is inexpensive. Though the stock has gained 40 in the last year, not everyone is as bullish on it. The CEO of investment research firm New Constructs, David Traynor, predicts that Tesla's stock might temporarily go as low as $150 to $200. There are now many other electric cars on the market that are successfully competing with Tesla, which no longer has the fast mover advantage. Traynor claims that Cathie Wood is basically making statements that shiny, glittery things that might be intriguing or tempting to gullible retail investors, but they are missing the point about where Tesla is positioned competitively. Despite skepticism, Wood's model predicts enormous profits. One important element, according to ARK analyst Tasha Keeney, is the belief that Tesla will have greater capital efficiency. Consequently, from $84,000 in 2017 to $7,700 in 2018, Tesla's capital investment per incremental unit of capacity has dropped. Keeney notes that although Tesla's Bitcoin holdings are taken into account in ARK's model, they are not considered a crucial projection factor, increasing the price prediction by less than 5. Alternatively, Tesla may choose to explore alternative business opportunities not covered by the model, such as energy storage, AI as a service, and a humanoid robot. Because ARK has made its model publicly available, anybody may conduct simulations and modify the parameters. How do you feel? Do you think ARK Invest's projections are accurate? Please leave a comment below.